What is interest rate? You decided to lend your money to your brother. It's like lending out your house. You can't live in it at the same time, so you decide to charge rent on it. Same thing with your money. You can't use it, so you decide to charge rent on it. That is called interest. And how much you charge is the interest rate. So, how do you calculate the interest rate? This will depend on how much you can get by lending to the bank by putting it in a savings account, for example. You then have to add a credit risk margin and for expected inflation. For longer periods, say 10 years, you don't know what inflation might be, so you may want to reset the interest rate periodically so it becomes floating or variable rather than agreeing on a fixed rate up front. Say you lend 100 at a fixed rate of 10% for 5 years. You can collect this $10 interest each year, adding up to $50 of interest. If, however, you're happy to wait until the end of the term to receive both your capital and interest together, things get interesting. At the end of year one, the interest of $10 gets added to the capital he owes you. So we start year 2 with him owing you 110. The interest on that now is 11, not 10. Next year, the interest is 12.10, and so on. Notice the amount of interest is increasing. This is called compound interest. So you make $61.05 of interest in 5 years rather than just $50. Compound interest is fantastic if you're the investor and can be disastrous if you're the borrower. If you found this video interesting, chances are your friends will too. Make sure you share it with them.